Good afternoon, all. Welcome to the Liberty Call for Tuesday, May 24th, 2022. Hope everybody's having a great day. I apologize. I'm a few minutes, well, I guess about a half hour. I shoot for 20 after the hour and had to go run to the post office. And while I was in town, went to the grocery store. We were out of cheddar. You can't cook food without cheese. I mean, it's one of the, staples of America. So, again, hope everybody's having a great day. If it's your first time watching, give me a thumbs up, a like, a share, subscribe, all that good stuff. I would certainly appreciate it. If you want to book a meeting, please go to dsafinancialgroup.com. You go there, find all my contact information, little details about myself, and about what we do here at DSA Financial Group. All right, well, let's go ahead and jump into today's markets. It was a pretty ugly day for most of the major indexes. The Dow did finally make it into green territory late in the day, but it started out quite ugly. All right, the Dow Jones finished up 0.15% at 31,928. The SP finished down 0.81 at 39,41. The Nasdaq was down 2.35%. The tech sector is continuing to take a beating as of right now. Small caps are down 1 1/3. The VIX was up today 3.41%. It's currently sitting at 29.45. Give me a second to clear my throat. Sorry about that. All right. Moving on to the other exchanges here in the Americas. Canada was up 0.44. Brazil was up 0.21. Mexico was down 0.14. Headed over to Western Europe, mostly reds. Germany was down 1.8. The UK was down 0.39. France down 1.66. The Euro stocks was down 1.64. Netherlands was down 2.04. Spain finished flat at up 0.06. Italy was down 1.08. Switzerland was up 0.15. Portugal up 0.85. Belgium down 1.16. Austria down 0.45. Sweden down 0.88. Denmark down 0.96. The Russian exchanges were split. The MOEX was down 0.36, while the RTSI was up 1.6. All right, let's move down to the Asian markets. Japan was down 0.94. Australia down 0.28. New Zealand down 0.81. China, heading over to China, Shanghai was down 2.41. The SZSE component down 3.34. The China A50 down 1.84. The DJ Shanghai down 2.65. And the Hang Seng down 1.75. And the Taiwan weighted was down 1.19. So looks like most of the Asian markets were in the red last night. And, kind of split across Europe. There were a few green spots there. And then, like I said, here in the US, mostly tech really took the beating. The broader market with the large caps with the S&P 500 is only down about, less than 1%. So nothing too terrible. Again, let's bring up my chart here and we can see this is today's chart for the Dow Jones. Looks like it got down about as low as about 1.5% or about 470 points. And got its peak was up about 120, 130 points and only finished up the day about 48. So pretty rough there. The Dow transports were down most of the day or just, down all day. The NASDAQ, the chart, started out way down and pretty much stayed there. Standard & Poor's did attempt to rally, much like the Dow, but just couldn't get back to above water. And the Dow Utilities, might have something to do with the price of energy, did very well today. Let's see, they were up, almost 1.73%. So not again, it's to be expected. If we pull back out and look at the the chart formation, we've been in this negative downtrend really since the first of the year, and until things change and we break this cycle, I don't have a lot of hope for any real big upswings. We talked about dead cat bounces yesterday, and we're going to go through these until we truly bottom out and hit the trough. But in my experience, I mean, this is I went through this in 2008. Again, we had a few downturns, small ones here or there over the course of the last 10, 15 years, and then of course 2 years ago I call that more of a flash downturn just because the Fed came to the rescue really, really fast and bailed everyone out. They didn't wait like they did back in 2008 and 9, where things had kind of crashed, and I mean TARP didn't really become a thing until gosh, probably end of 2008, early 2009. My mind's kind of fuzzy. It's been a while. So, all right, well, let's go ahead and jump into today's market recap. SP 500 cut some losses, but Snap's slump keeps tech under pressure. All right, the SP 500 moved off session lows Tuesday, but remained under pressure from a slump in social media stocks after Snap warned on profit amid a deteriorating economic backdrop. Snap fell more than 42% after the social media company cut its guidance on revenue and profitability, citing a faster than anticipated deterioration of the macroeconomic environment. The warning from Snap, quote, will sound the alarms on deteriorating macros, evolving effects on digital advertising, end quote, RBC said in a note after slashing its price target on the stock to $17 from $25. Concerns about a weaker backdrop of advertising spending sent shockwaves throughout social media stocks. Meta platforms fell more than 7%. Twitter was down more than 4%, while Pinterest slumped more than 23%. Zoom Video Communications, meanwhile, sidestepped the selling after the software company reported better than expected quarterly results and raised its annual guidance, sending its shares up more than 7%. Elsewhere, on the earnings front, companies continue to flag the impact of inflation and worries about the growth outlook. Abercrombie and Finch plunged more than 30% as the retailer cut its sales outlook for the year after reporting a surprise first quarter loss owing to rising transportation and product costs. AutoZone rose more than 4%, following a better than expected quarterly results. Home builders were also adding pressure to the broader market on data showing new home sales fell to the lowest level since April of 2020, as mortgages hover at their highest level since 2009. Quote, the Federal Reserve is pumping the brakes. The most interest rate sensitive sectors, notably housing, are cooling, end quote, Grant Thornton said in a note. Toll Brothers, which reports quarterly results after the market closes Tuesday, fell more than 3%. Lennar and KB Home were also in the red. Again, not to be surprised that the housing sector is going to, the housing sector, and then by extension, that'll have an effect on the home improvement business, like your Lowe's and your Home Depots, especially with their commercial sales. They're probably going to see a drop off there, would be my guess. So, again, until everything really, settles down and it stabilizes again, we're just going to see a lot of this along the way. All right. Next article here: U.S. business activity slows in May. Survey shows U.S. business activity slowed moderately in May as higher prices cooled demand for services, while renewed supply constraints because of COVID-19 lockdowns in China and the ongoing conflict in Ukraine hampered productions at factories. I really don't know what Ukraine has to do with factories here in the United States. I mean, yes, there could be some things that could be affected, but in the broader picture, I think that's more of an excuse. S&P Global said on Tuesday its flash U.S. composite PMI output index, which tracks the manufacturing and services sector, fell to a reading of 53.8 this month from 56 in April. That that growth pace, which was the slowest in 4 months, was attributed to, quote, elevated inflationary pressures and further deterioration in supplier delivery times and weaker demand growth, end quote. A reading above 50 indicates expansion in the private sector. The index remains consistent with strong economic growth halfway through the second quarter. The economy contracted in the first quarter under the weight of a record trade deficit, although domestic demand remained solid as households increased spending and businesses ramped up investment in equipment. Annual consumer prices have increased at their fastest pace in 40 years, prompting the Federal Reserve to start raising interest rates in March and increasingly adopt an aggressive monetary policy posture. The rate hikes and tightening financial conditions have raised fears of a recession next year. The flash composite orders index slipped to 54.4 this month from 56.6 in April. Quote, companies reported that demand is coming under pressure from concerns over cost of living, higher interest rates, and a broader economic slowdown, said Chris Williamson, chief business economist at S&P Global Market Intelligence. The survey's flash manufacturing PMI decreased to a reading of 57.5 this month from 59.2 in April. That was in line with economists' expectations. Manufacturing accounts for 12% of the U.S. Of the economy. A measure of output at factories eased to 55.2 in May from 57.6 in April amid, quote, further reports of raw material shortages and delays in supplier delivery times, end quote, which also boosted unfinished work backlogs. China's zero COVID-19 policy led to the shutdown of the commercial hub of Shanghai, a major supplier of raw materials to factories in the United States. Its measure of prices paid for inputs by manufacturers accelerated to 84.9% this month from 81.9 in April, but factories continued to hire more workers this month. The survey's flash services sector PMI dropped to a reading of 53.5 this month from 55.6 in April. Economists polled by Reuters had forecast a reading of 55.2 this month for the services sector, which makes up more than two-thirds of the U.S. economic activity. Again, things are slowing down. Not to be shocked. All right. Next article here has to do with oil. It has, kind of slowed down. It reached up to around 110. It's kind of stayed there for a little bit. Again, until it gets back into the, I'd say 60 to 80 range, probably not going to see a lot of relief everywhere else. Oil next near flat after choppy trade. U.S. says export ban not ruled out. Ugh, I don't know if that's a good thing. Oil prices were near flat on Tuesday after choppy trade as tight supply worries offset concerns over a possible recession in China's COVID-19 curbs. Brent crude rose 14 cents to settle at 113.56 a barrel. U.S. WTI crude fell 52 cents to settle at 109.77. Oil has surged this year, with Brent hitting 139 in March, the highest since 2008, after Russia's invasion of Ukraine exacerbated supply concerns. Prices fell on Tuesday after the U.S. Energy Secretary Jennifer Granholm said U.S. President Joe Biden had not ruled out using export restrictions to ease soaring domestic fuel prices. Quote, initially, the assumption is that is going to reduce the prices of products in the United States, said Phil Flynn, an analyst at Price Futures Group. Also weighing on prices were worries about the global economy, a main theme of the Davos meeting this week. Yeah, the big wigs are over in Switzerland, thinking up new ways to torture us little people and make our lives miserable. Also weighing on prices were worries about threats. Beijing is stepping up quarantine efforts in its to end its COVID-19 outbreak, while Shanghai's lockdown is due to be lifted in a little more than a week. Prices earlier were supported as the European Union moved closer to agreeing to a ban on Russian oil imports. They keep talking about that, never gets done. Such an embargo would likely be agreed to, quote, within days, Germany's economic minister said on Monday. Was it Romania that's the ones holding out? Or was it Hungary? I forget. Travel during the upcoming U.S. Memorial Day weekend is expected to be the busiest in 2 years as more drivers hit the road and shake off coronavirus lockdowns despite higher pump prices. The American Petroleum Institute's weekly inventory report will be in focus at 2030 GMT for a read on demand. Analysts expect lower gasoline and crude inventories. Well, that's not shocking. As far as restricting, outbound oil, I don't know. I'm kind of conflicted. I don't like the government really doing, being involved in anything. Although I did hear, I think I heard it. Yeah, it was a clip from Jennifer Granholm being grilled by either a senator or a congressperson. Not sure who the person was asking questions. And really the point was, in the last, really since, Biden's taken office, we've really, put the oil and gas business in a headlock. And, done a lot of restrictions as far as exploration, new leases, canceled a lot of offshore leases, and that's a lot of what we're dealing with right now. I know the people on the left want to drive their electric cars that are powered by unicorn farts, but we have a right now problem. That's an out 20, 30 years down the road before we get the technology where the EV market is going to potentially replace the petroleum market for vehicles. So, anyways, that's my opinion. Take it or leave it. All right, last article here, a little estate planning article. Never hurts to wedge that into the conversation. I try to try to fit these things in when they pop up on my timeline. Inheriting a house. Read this before you make any rash decisions. All right. Leaving behind a home for a loved one to inherit is a huge gift, but without the right planning, it could be equally large headache. Beneficiaries must juggle many considerations when they inherit a home, especially if they're sharing that gift with siblings or others. There are tax implications whether they keep or sell the home, emotional attachments to the home, and items within the home, as well as the potential estate planning issues. There is no right or wrong answer when choosing to keep or sell an inherited home. In some cases, the property can be a source of rental income, whereas in other situations, it could be another source of cash after it's sold, especially when the real estate market is doing well, kind of like right now. But before jumping into the choice, here's what you need to know. Okay, housing market is overvalued. So if you're going to sell a property, now's probably a good time. If you're buying a property, probably not. Me personally, I might wait a year or two just to see if the economy crashes. You might be able to pick up some really good properties at rock bottom prices. Probably well above what you could afford today. All right. Tax implications of selling the home. Individuals who sell a home after living in it for 2 out of the last 5 years enjoy the benefit of an exemption. For single filers, the exclusion is 250,000, while for those who are married filing jointly, it's 500,000. The exemption is applied when a home is sold to reduce the capital gains the sellers would have paid. For example, if a married couple sold a home for $1 million and had a basis of half a million, they'd pay zero in capital gains tax for the sale. Comparatively, if they sold it for $1.5 million, they would reduce their tax obligation by 500,000, pay capital gains on the remaining 500,000. Surviving spouses who inherit the full value of a home from their husband or wife dies can still take advantage of the $500,000 exemption if they sell the house within 2 years of death, said Peter Pallione, a financial advisor and founder of Master Plan Advisory. Ooh, that sounds impressive. Non-spouses should think carefully about it if and when they plan to sell the home. Their basis of the inherited home becomes the fair market value on the date of death of the grantor, which means they'll pay very little in taxes if they sold the property in the short term. Comparatively, they could face a large tax exposure if they were to sell the home after numerous years or decades. For example, if the grantor left behind a home after she died in 2010, when the fair market value of the home at the time was $250,000, and the beneficiary held onto the house for another 10 years before selling it at 500,000, he'd be responsible for paying the capital gains on the difference. In this case, 250,000. Beneficiaries should reach out to a real estate professional who can assist in determining the fair market value of the home or to get an appraisal on the property. The first thing they need to do is establish the value of the property, said Jennifer Grant, a financial advisor at Perryman Financial Advisory. Quote, this small action could pay for itself many times over in tax savings, end quote. For some, the best strategy for this inheritance may be to hold off on selling, perhaps because they need time to make this decision. In that scenario, the property must still be maintained, secured, and the taxes, insurance, and mortgage payments must still be paid, said George Riley, a financial advisor at Safe Harbor Financial Advisors. Quote, generally, there is time to assess the situation and determine if you want to keep the property and either use it or turn it into a rental property or sell it, he said. If the home still has a mortgage, beneficiary should reach out to the lender to see if there were any clauses regarding the change of ownership. Riley said, if the existing rate is favorable, they may be able to keep the loan instead of refinancing, said Rob Greenman, lead advisor and partner at Vista Capital Partners. Working with other beneficiaries. In the inheritance of a home can get trickier when more than one beneficiary is listed, especially when including children and grandchildren. Quote, if there's no agreement, the only solution may be to sell, end quote, said Patricia Hausnost, a financial advisor. There are various options for family members There are various options family members can take, including selling the home and splitting the proceeds, renting the home and sharing the income, or finding an arrangement if one of the siblings wants to keep the house, such as buying out the others or trade other inheritance assets for the property. Deciding to keep the home or sell might also come down to how worthwhile the property is as an investment. Can beneficiaries see a better return if they were to use it as a rental income or put the sales proceeds into an investment in an investment portfolio? Is the home in good shape or does it require repairs and improvements? Quote, there are things get more complicated when the next generation, grandchildren inherit. In quote, House Nost said, quote, there are generally more options, or I'm sorry, opinions, which make it more difficult to reconcile. So good, good bit of things to think about there for those who own property and are planning on leaving it to the next generation or beyond. Put your wishes down on paper. Maybe sit down with whoever it might be, if it's your kids or grandkids. Talk it over while you're still of sound mind. That's probably my best advice: is make sure there aren't any surprises when when the when the estate is read and when everyone finally gets access to those assets. All right. Well, that's everything I had for today. Hope everyone has a fantastic evening. I'll be back tomorrow. Tomorrow's Wednesday, hump day. Hopefully, the Astros play a better game this evening. They played like crap. Well, not crap, but it's like it's feast or famine with these guys. Either they're knocking the ball out of the park all over the place, or they can barely score one run, and it's frustrating from a fan's perspective. So, all right. Well, everyone have a great night, and I'll see you tomorrow. Bye, folks.